First of all, good morning, ladies and gentlemen. It's a great honor to be here. I'm very glad to give you some doubts about consolidation and interoperability. From consolidation to interoperability, we like to think this is a radical shift in thinking and economics, but as we can see from past history, consolidation and interoperability are not on opposite poles from each other. In numerous cases, a move from consolidated business line to fragmentation has come full circle back to a stronger and more competitive consolidation. Is this what is happening in the clearing space? Interoperability, not the easiest word, sorry to say that. Interoperability started in 2003, grew in 2008, and has finally gathered real momentum in 2011 and 12 after years of standing on podiums like this saying within the next 3 months. CCPs are now viewed as vital cogs in the trading to settlement process, so platforms, usually national exchanges, are looking to buy them in order to lock in the flow. We have had self-regulation. Let's just say that too many of the signatories of the code talk the talk, but were never going to walk the walk. And then fragmentation has come along, and both the trading and clearing layers bringing increased competition, increased liquidity, and of course increased regulation. And of course, verticalization has never gone away. So, is interoperability our end goal, our nirvana? Or is it a stepping stone to something better? We all know basic economics. After all, we are all bankers. We are all trying to achieve the greatest economic of scales. Huge volumes reduce costs, which benefits the clients. But in speaking about economic welfare, what is in it for the CCPs who are constantly being pushed to reduce fees? The market wants competition, but it also wants innovation. We can see from vertical silos that they are reluctant to reduce their profits, and there may even be reluctance to spend money on innovation. The market is driven by the CCP in that case and not the client. However, a market, and I speak here collectively, we have to ensure that the profits generated by fragmentation are greater than the costs caused by increased levels of regulation and governance, which fragmentation has caused in order to provide competition. So, the clearing landscape of today looks very different to that of 10 years ago. If memory serves me correctly, the cost of clearing a trade then was in the region around 40 pence in the UK. Also, the number of CCPs was a lot less. New entrants have come into Europe, changing the dynamics from nationally ensconced CCPs, or have they? Although we have 4 interoperable CCP competing for flow. The amount of flow they are competing for is limited to 3 platforms at this time. Other platforms has 1, 2, or 3 CCPs, so it seems that full interoperable model does not make sense for every trading platform. Regulators have become more involved in an interoperable model. In Europe, both they and the politicians want CCP to have a greater role in both equities and derivatives, but while saying this, they want to put in more and more safeguards for clients in case of a CCP default, which is increasing the cost for both the CCP and ultimately the clients. The clients would like their CCP of choice to handle everything from equity to derivatives, from commodities to forex. At present, there is no CCP able to do this, and the question would need to be raised if they were too big to fail. However, this may lead to platforms or product providers to designate one CCP, leading to concentration. Concentration is the consolidation of flow from platforms or products through one designated CCP, allowing the client no freedom of choice. Interoperability, on the other hand, allows the clients to consolidate their flows through the CCP of their choice for multiple trading platforms. So, how will the market bring about this change? Clients need to align their business with just one or two CCPs rather than trying to back everyone until a winner emerges. This is slowly starting. The national exchanges are slowly changing their stance toward interoperability. Their arguments that the flow generated through them is systemically important, and as such the CCP should be of a relevant standing, of one which the CCP should take on board. The CCP, trading platforms and the regulators should work together more closely to ensure that the greatest amount of risk is mitigated throughout the system without causing access costs and pressure to the CCP or the clients. These are the challenges facing each of us every day. How we decide to manage them will determine the path forward. So the next question is the client the winner? All market participants believe they provide the best services to their clients. But if you speak to the clients, you may get a different answer. Where vertical silos have little or no regard for their clients' wishes, interoperability have given more power to the clients. You can say the client is the king. Well, in this case, the client gets numerous benefits by having interoperability and choice. And if they are not happy, they can always move on to the next CCP. The platforms who embrace interoperability have also benefited in that liquidity increases and trading volumes goes up. The CCP are squeezed in the middle. Unless they get the volume, they do not get the profit, which means they cannot innovate or move into new markets. Choosing a CCP is no longer all about price. There are now many other factors which clients need to consider. Headline pricing is what everyone focuses on. Yet these days, with pricing being cut to levels which 10 years ago, those of you who were around would laugh at. Is it such a big issue? For platforms where interoperability exists, it is no longer about the cost per trade. It is about the overall cost, the cost of margins, the cost of default fund contribution, the inter-CCP margin cost, and of course the settlement costs. Clients are highly focused on their cost-income ratio, but at the same time they are looking past cost, although there's still one of their criteria to other issues. Footprint, for example. Who covers the most platforms? Risk management is another one. Real-time information is requested. GCM wants to set limits on their NCMs. Governance, another one. Clients want to have a say in the direction of the CCP to bringing back innovation. Sustainability, another one. A number of CCPs have decided to cap fees so that above a certain level all trades are free. This is a loss-making exercise. It has to be subsidized from somewhere else, parent companies or other product lines. And at some point, the regulators will look at and say probably unfair competition. All those CCPs, the main revenue is not from the large clients generating the most flow, who get all the benefits, but from the small or medium-sized clients who are not big enough to get to the cut-off point. The future of interoperability is to lead to consolidation. We view the landscape having 2 or 3 fully interoperable CCPs covering all platforms. However, the national exchanges will still link to national CCP for local and regional clients. Regulations, especially in the derivatives world, will become more onerous. The new ESMA authority may want to show its teeth to Europe. Clients will focus on linking to 1 or 2 CCPs at most, providing them with the best concentration of their business flow by market and products. The focus will also switch from cost per trade to total costs. We have seen a new cost lately, the inter-CCP margin, which in most instances being passed back to the clients in full. Why? The CCP benefits from interoperability, so should they not also pick up some of the costs? We believe that the CCP should, so we split the cost 50 by 50 with our clients. I can also say we will not go to zero pricing, but will always charge at least the marginal costs. Our clients do not business for free, so why should we? We want our business to be sustainable, have cash for innovation and growth into new markets, regions and products. Also, I do not have to try to explain to my regulators how I'm cross-subsidizing or to my clients when fees have to go up again. Coming to the end, settlement costs will become more of an issue. I would hope that 2-2S will provide us all with lower costs and higher efficiencies. However, we may find that some markets will move to a CSD-centric model for clearing similar to that here in the UK in order to generate new revenues. This model allows CSDs to charge for functionality which already exists at the CCP. Penalty regime may also be instigated. Going forward, we need all markets to move to a CCP-centric model, but this will need either regulation, once again, unfortunately, or a lot of time and effort from both clients and CCPs. Apart from that, we just need to get all platforms and all markets fully interoperable. Then the winners will rise and the losers will fail. Then we are back to the consolidated markets. Thank you very much for your attention.